Hello there. Here is the Guild of Property Professionals Spring 2022 Regional Property Report for Norfolk, Essex and Suffolk. The desire to move remains on the agenda for many, with little sign that at the moment that the economic headwinds are impacting the property barometer dial. So far, 2022 has started strongly. According to HMRC, sale volumes in January are predicted to be 10% higher than the long-term average recorded between 2012 and 2021, and except for a year ago, are the strongest since 2007. Buyer demand remains steadfast and is up 16% year on year. Added to that, property price growth continues to be sustained, with the Nationwide reporting that the annual price growth in year to January was at its strongest in over 15 years. Rightmove reported the biggest monthly jump in the asking price of a newly listed property since 1994, and when asked, the majority of agents are still expecting growth over the next 3 and 12-month period. Looking specifically at the regional markets, at 11.7%, annual property price growth in the east of England is considerably stronger than 4.6% evident a year ago. The pandemic search for space is still playing out in many markets, with prices for detached homes currently seeing the strongest growth of all property types. Average prices are up over 15% on the year on year. Uttlesford, Brentwood and Braintree in Essex proved to be the fastest moving markets in the Essex, Norfolk and Suffolk area over the course of 2021, with more than 1 in every 20 privately owned properties estimated to have changed hands in that time. 2022 has started with momentum. At 39 days, the average time taken to sell a property in the east of England is over 3 weeks quicker than a year ago. Although the quantity of property for sale remains low, with the Royal Institute of Chartered Surveyors reporting that barring the market closure in 2020, stock levels per agent are at a record low in January, and there are signs of change. New listings in January rose 11% year on year, with Rightmove noting a substantial rise in home valuation requests, an indication that many are looking to sell before they buy in the current market conditions. These should feed through to agents' books over the coming months. Historically, March is the strongest time to sell, with the highest number of buyer inquiries per property for sale. Across the UK, governments are announcing their plans for living with COVID, and hybrid working is bedding. With economic growth of 7.5% over the course of 2021, the UK economy is close to its pre-pandemic level. However, consumer confidence remains on the edge due to the rising cost of living. Increases in the cost of food, clothing, along with rising fuel and energy prices, looks set to squeeze many household incomes. Savings made during the pandemic may well prove a cushion in the short term, and while interest rates may well rise from 0.75%, they remain low by historic standards. An estimated 68% have a mortgage to pay on their property. Therefore, any rise in the base rate of interest is a cause for concern. However, with nearly 3/4 of homeowners currently on a fixed rate deal and 94% of new loans being issued on this basis, many are protected in the short term. Also, the base rate of interest in the UK has been 1% or lower since February 2009, although experts do predict the rate will rise back to 1% by the summer in a bid to curb the rising cost of living. This remains low by historical standards, with mortgages taken out since April 2014 being stress tested to a 6% interest rate. Demand for rental property has also hit a record level at plus 64. The net balance of contributors to the RICF survey reported an increase in January. Tenant demand is at its highest ever recorded level, with Rightmove reporting renter demand is 17% higher than in January 2021 and up 33% compared to January 2020. Like the sales market, a shortage in property to let is underpinning prices, leading to rises in average rental values in all areas of the UK. However, according to a Property Academy survey, many landlords are keen to keep existing renters. 76% would maintain a rent level if they were happy with the existing renter. So that's it. That's the regional report for the Essex, Suffolk and Norfolk area, and I'll see you very soon. Thank you. Bye-bye.